Yes, Simon, you're live now.
Hello, everybody. Great. We seem to have some technical issues, so I'm second round of trying to go live, but I think we're live this time. So we're going live with a special episode post Bitcoin halving. If you watched my video last week, I'm going to go to my full screen now. You'll have some expectations around what normally happens with the price. So for those of you who don't know what Bitcoin halving is, last week we went live, explained a bit more about how the Bitcoin money supply actually does the opposite of the fiat money supply. So in the fiat money supply, we're going through quantitative easing, and quantitative easing is the process of creating new digital currency, which is a digital representation of what you all know as the pound, the dollar, the euro. Essentially, if you want to understand a bit more about why it's a digital currency and not governments printing money, then check out a video I created called Who Makes Money from Printing Money, where I went through all the different forms of money and the slight nuances and differences that confuse people a lot. So in the traditional fiat world, which is your pounds, your dollars, your euros, the governments are increasing the supply of the digital currency. And this week, the supply of Bitcoin went through its next phase of halving. That means that the supply of Bitcoin is known and cannot be changed. It's 21 million, and it will never be more. It will never be changed. And every 4 years, the number of new Bitcoins that are rewarded to miners is cut in half. And so we just went from 12 and a half Bitcoins for every block. It's called a blockchain because it's a chain of blocks. All the transactions are packaged up into a block and is verified by all the miners that perform the role of banker and auditor. And it's the largest supercomputer in the world, verifying all those transactions. And we've now got 6.25 Bitcoins per block as a reward for those miners, verifying all those transactions in the Bitcoin network. And so that happened, and this is my third halving. I've been through all of them, and in each halving, it's pretty much followed a similar pattern, which is leading up to the halving. So we had, obviously, the difference this time is we had a ginormous health crisis that then led to an economic and eventually financial crisis. And that obviously meant markets all around the world, from gold to Bitcoin to stocks and bonds and everything, went through a correction. But then after the correction, we had a lead up to the halving where you have a bunch of people that start buying Bitcoin because they know that the supply is going to contract. And we have our equivalent of, I guess you could call it, quantitative tightening, while the traditional fiat world is quantitative easing. And then everyone gets very disappointed because halving is a bit of a non-event. I was on on the Tone Vay show doing a broadcast over there with many of the OGs in Bitcoin, and that had about 14,000 live views. So if you were over there, thank you for joining us. And then you have a bit of a non-event, and you normally have a correction during that time because people are expecting the short-term speculators always lose money to the long-term investors, as usual. And then those that think that they're going to be smarter than the market and beat the market get wrecked. And then you go into a sideways market normally. And in the past, that has led to a bull market approximately 6 to 9 months later. And in each of the halvings, the amount that Bitcoin increases has been slightly less. But the bull market in Bitcoin is certainly, a lot more than in a traditional market. So if you watched last week's AMA, then you would have been prepared for that. But, as I'm always saying, the investors make money at the expense of the speculators. The speculators, 90% of them lose money to the people that have a long-term investment approach that can dollar cost average in and use some principles in order to get that. So talked about all of that in the last AMA. So the question is, do we pump, do we dump now? Well, if you want to lose money, then continue your gambling, trading mentality, and 90% of you will lose money and 10% of insiders will make money. If you want to play the game the way that the investors, the way to do this, then put together an investment strategy and play the long game. And I'm going to be working really hard on, we've made some really good progress on the investment course. We'll give you some updates on that as we go through. But I don't do things half-heartedly. When I want to do things, if I'm going to commit to something, I want to do it really properly. So I'm condensing everything that I've learned really from 20 years of starting in economics to actually working in the investment banking, to being around and studying some of the best investors in the world, and being around in Bitcoin right from the beginning, to condense that into things that absolutely everybody can do. So I'm really looking forward to bringing that over to you. Another thing, earlier today or yesterday, we started to release some of the archive videos. So we've got on Simon Dixon, my YouTube channel. Make sure, if you haven't subscribed already, to subscribe to that and hit the YouTube notification bell, and YouTube will send you a video every time we go live. And what I'm also going to ask you to do is a bit of a new mission for me, which is, over the last 10 years, I've only really been working with high net worth investors and influencers in the crypto space, investing in their companies. But now, really, in the current environment, I want to make sure that these content actually gets out to a lot wider audience. So in order to do that, we've got to play the YouTube game. And the YouTube game is, everybody in 3 seconds, hit the like button. 1, 2, 3. Hit like now. And the more likes we get, the more people will actually get this content. And it's been working really well. So really appreciate you joining the community and subscribing to the channel. And, something that I've never really focused on, but let's play the YouTube game so that we can get this message out to more people, and more people can be prepared with the financial analysis that comes ahead. So this broadcast, really, I just wanted to cover that, the pump and dump, the price patterns around halving. We're now in the quantitative tightening environment within Bitcoin, while the traditional fiat currencies are quantitative easing, which means that in the future, your currency will be worth less as it gets diluted further and further and further. Also worth noting that we are in a very interesting time in the debt cycle. So I'll be covering more in terms of where we are in the debt cycle, and also look at some other videos that I'll be reposting. One of the videos we reposted is a debate that I did with somebody that was involved in Bitcoin right from the beginning, Roger Ver. And we did a debate together in Tokyo in 2018. And I posted that up there. And what I'm doing is going through some of the archive videos, because many of you gave me feedback that my YouTube video goes right back before Bitcoin, when I was involved in the monetary reform community. And then obviously it had like the first Bitcoin conference and my speech there, and many other videos in between. But what I'm doing is I'm reposting them and adding some commentary about what's changed since then, because obviously so much has changed in the last decade. So let me know if you like that format in the comments section. But the Roger Ver video debate was actually posted there, and Azad has been pulling out some of the important content that many of you might have missed, so that we can bring you up to scratch really on where we are today, so you can make better financial decisions as this whole financial system goes through what I believe to be one of the most radical transformations that we've seen, certainly in my lifetime. But depending on your age, whether you live through the post-war Bretton Woods and some of the Nixon removal of the gold standard and moving over to where we are today, going to be some of the most interesting times in financial history. And my job really is to try and simplify some of this so that you can decide where you want to be on the side of this information curve. So with that in mind, I'm going to take and move over to some of your questions. So Azad is here, as he was last week, and he's going to be picking out some of your questions. So if you've liked and you've subscribed, let us know what you'd like me to cover, and we'll pick out as many of your questions as we can. Azad, what have you got?
Hello. Yeah, we've got some people who watched the Roger Ver video. They really loved it. So it's good to know that people want to see some of the golden oldies and debates and stuff. So there's a question that was in our, I think, a couple of weeks back, and it was a question you really wanted to answer. You've not had the chance to do it, but let's do it now. If the government launches its own digital currency, as you predict, could they just ban BTC altogether?
Yes, they can. So, and the government have done it in the past, and we've got history that we can look to. So, one of the things that I always try to do is often we think that something is new, and while the it might actually be new, you can look to history for similar moments to try and get an understanding of what might come next. And so we saw this with the reforms in the past, where America took it upon itself to make gold illegal for people to own. So they decided to remove the convertibility of the dollar into $35 of gold. And they demanded everybody to actually hand over their gold in exchange for 35 US dollars. And the Federal Reserve and the central bank held all those all those gold supplies and used it as a reserve currency. So, what can we learn from history? So, if America decided that they wanted to make Bitcoin illegal, then one thing that we have seen is we can look at what happened in the Silk Road scenario. So in Silk Road, it was an illegal marketplace which allowed people to trade commerce. And because much of those things were things like the drug markets, um, and because Ross Ulbricht, the founder of Silk Road, created a safe way for people to buy and sell drugs and have them delivered to your home so that you don't have to go out on the street and risk having a gangster put a gun to your head. He created the first safe marketplace for people to buy and sell drugs online. And it actually started to have a reduction on the amount of crime as a result of people having to buy drugs from the street. So it created a much safer way of a losing war on drugs that many governments have had. Um, and when that was actually shut down, the FBI, the Federal Bureau of Investigation, took all the Bitcoins and added them to their balance sheet. And so the government actually used those Bitcoins. Now, what's interesting is they auctioned off those Bitcoins to many of the influential Bitcoin well venture capitalist investors. And it was one of the worst trades that the government has ever made because they were auctioned off at approximately $600. And today Bitcoin is worth about $9,000. So they auctioned off the highest performing asset class year on year when they could have held it. And so what they do with these confiscations is rather than destroy Bitcoins and make them illegal, the government take them and try and profit from them. So when they made gold illegal in history, they did that. They tried to fight the trends. They decided that they negotiated the dollar to be the reserve currency. And then all the other currencies in the Bretton Woods negotiations were pegged to the dollar. And then they removed the convertibility later of gold to dollars, which essentially put us onto the fiat standard that we are on today, where fiat currencies are backed by nothing and converted and traded against each other. So they could try to do the same thing with Bitcoin. They could make it illegal. They could request everybody to hand in their private keys. And those that want to be law-abiding citizens could do that. What we also noticed is that the effect it has on the gold markets internationally becomes a speculative tool for other central banks to accumulate gold and see it as a way of getting a competitive advantage. So if one country made it illegal, another country could decide that they want to actually hold Bitcoin as a reserve asset and actually engage in competitive markets. So countries where there's friction, so for example, China. China is engaged in a trade war with America before this health crisis. they could use Bitcoin as a tool in order to try and make a dollar less relevant in the world, especially if they made it illegal. And we start to move to more draconian policies in America, and it starts to lose its reputation as the land of the free and moves to more of a socialist and eventually communist society as they start to tax more and more and more in order to pay off money, all of the debt that has been created for the government through quantitative easing. I believe that they'll launch their own central bank digital currency, but thanks to the laws of competition, you tend to get a premium for things that are illegal in certain countries. So we see this in countries like Venezuela right now, and we saw it in India when the RBI, the Indian Central Bank, made it illegal for banks to deal with crypto exchanges. You start to see a peer-to-peer market and premium on those black market goods within that circular economy. So at the moment, if you're in a country like Venezuela or Argentina that is experiencing currency destruction, you have to pay significantly higher for Bitcoin in those countries where there's certainly no currency restrictions as a result of devaluations and hyperinflation environments of those currencies. Other countries come along and see this as an opportunity, and therefore the laws of competition with competing governments recognize that if you want to be the next superpower economy, then your best bet is actually to accumulate Bitcoin and announce it as an asset that you hold on your balance sheet at the central bank. And when you do that, you make essentially Bitcoin in your country a world reserve currency, because the definition of a world reserve currency is that central banks use it as one of their assets. And you enter into a game of chicken. I created a video a long time, actually last year, where I outlined a scenario of how Bitcoin could become a world reserve cryptocurrency by 2020. And it outlined the different types of central banks and how this competitive force could work. If one of the governments, a major government like America, decided to make Bitcoin illegal, then it would hyper accelerate that scenario, lead to a black market premium for Bitcoins and an opportunity for other current countries to use Bitcoin as a tool in order to try and win some of the currency wars that I've talked about in previous videos. So what happened with gold in the end? Well, eventually they had to make it legal for Americans to own gold in the end because they couldn't fight the trend. And they used it as a tool in order to try and engage in some of the central bank reserve assets and global currency wars. So we've got precedent for all these things of the confiscation process, what happens when one country makes it illegal. We've even seen it in China. When China made Bitcoin exchange illegal, they ended up with a very buoyant mining industry where in China, they were taking Chinese yuan, purchasing machines, and then spitting out Bitcoin through the mining process. But the exchange of them became legal, so it had a very buoyant peer-to-peer market. And in China, they had to pay a higher price for Bitcoin once they go through those policies. And then eventually, I think we're going to see China using it as a mechanism for their currency wars against the dollar, as these opportunistic things arise in one of the largest game theories that I think could be coming. So the answer is yes, governments can make Bitcoin legal. And the answer is yes, governments will make Bitcoin illegal. And therefore, we start to see what happens. And we've got plenty of history to go through to see what type of effect that might have. And eventually it becomes legal in that country as other countries start to adapt.
Okay, thank you very much for that, Simon. We're getting a lot of questions coming through, so thank you very much, everyone who's contributing questions. So we have one, which I think is an interesting question. Do you imagine an extra big Bitcoin pump when the US interest rates go negative?
The answer is I really don't care about short-term speculation, and I want to encourage you to avoid that type of thinking. This is the type of thinking that that ends up with people losing their Bitcoin through over trading. I've seen it over the decades. I've seen so many people that from Bitcoin right from the beginning, and they lose their wealth through over trading. So in terms of the short term, I don't look at those short-term trends. I'm just looking at the long-term trends. And then once I've got a long-term trend and investment theses, I use sound investment principles to put together a responsible strategy using some of the tools of traditional markets combined with the tools of the crypto markets, and then look at some of the compounding effects that I can get and diversification into equity positions, and really combine these tools to put together an approach that can work in any market, whether we enter inflation, whether we enter deflation, whether we enter a period of economic growth, or whether we end up in a period of economic uncertainty. And that's the type of thing that I'd encourage people to think about, and that's the type of thing that I'll be going through when I talk about how I'd be putting my money starting from scratch in the current environment. So I want you to think in terms of risk neutrality rather than outsmarting the market, because the reality is that you are playing politics, and politics is pretty hard to predict. So what you can look at is the longer term trends and how to benefit from those trends, whatever the market actually does. And that's what professional investors do, and that's what I'd encourage people to explore. And that's why you never see me tell you what I think short-term prices will be.
Thank you very much for that. Just before I ask another question from the group itself, the chat, somebody mentioned that they'd love to see you debate with Roger Ver again, only this time if he doesn't interrupt you. So how do you feel about that? And with regards to your book, Bank to the Future, I think now's a great time to sort of talk about what you're going to be doing, because we've had a question come through saying, where can I get your book, Bank to the Future? Much cheaper than £23.50 that's currently on Amazon.
Yeah, so I talked about this in previous videos. My book, Bank to the Future, is actually the publisher that published it has never actually paid me. So they keep all of the money. And I never wrote it in order to, sell books. I just wanted to get the information out there. But it was the very first book in the world that included the topic of Bitcoin. And it talked about many of the monetary reform and principles and the technologies, and combined a bit of fiction and non-fiction, where we traveled in time, looked back at all the real financial, historical major events and crises, made a few reforms, and then traveled to the future to see what impact it had. And then combine that with many of the technologies that were at the time very nascent technologies, including Bitcoin, which when I wrote in 2010 had only just come around. Well, I started the book in 2010. What I've decided to do is that I think, going back to that book, there were many principles that turned out to be invaluable even through today. But also there were things where I was a little bit cringe because my opinion might have changed over the last decade, especially with regards to privacy and the importance of privacy and how these technologies impact personal freedoms, liberties, and privacy. So what I wanted to do is actually take each chapter of the book and still have the original version, republish it, but add a video at the end with a QR code where I go through how my opinions have changed now that many of the things have happened, and what I'm expecting to see next. So that way we can also make sure that it's republished on Amazon, so that the publisher has never sent any of the money. Shame on you for keeping all those funds. I would have rather have given it to a good cause and some kind of thing that makes a difference in the world, than feeding just the publisher's pocket. Then we can actually see what we can do with that as well. Also, as part of my initiative to actually try and bring what, I've been working with the 1% for the last decades with many high net worth investors, and investing in crypto companies, and then bringing that through Bank to the Future to investors that qualify to invest. I want to bring a lot of this information to the 99%. So people that have just regular incomes and want to know how to protect themselves and how to plan long term. And then also some people that might have lump sums of investments that are looking to actually diversify into this industry. Then I want to bring that to the 99%. And so the reason why I'm being a lot more active on YouTube, and the reason I need your help, is to make sure that I start to get some of those subscribers and likes so that we can get this information out there. And part of that is to repackage the blog. The blog, Simon Dixon, it was originally on simondixon.org. And we're moving it over to simondixon.me because I actually lost the domain because I wasn't focused on it. But it had some of my original blog posts from before Bitcoin, after Bitcoin, and throughout the whole period. So we're going to make sure that we revamp that. And for anyone that actually registers there, you can enter your details, and we'll make sure that we'll find a way to notifying you about how to get that book. Yeah, we'll do that at simondixon.me. It's not quite live yet. The developers are working on that so that we can make it look a lot prettier. It's pretty ugly at the moment and not working too effectively.
Okay, thank you very much for that, Simon. One thing we've had, I don't know, just on the line of debates, we're getting quite a few suggestions. And obviously, if you don't mind, I'm just going to angle it slightly here in terms of the type of people you want to be debating. Do you know of a good person called Eric Townsend? We've got a person who said Eric Townsend has previously put forward, in their opinion, some of the best counter arguments against Bitcoin. And he was interviewed by Preston Pish on the Investors podcast in 2018. So do you know Eric Townsend, and would you like to do a debate with that person? Secondly, the main question, what regulation of stable coins are likely, if any? And it's probably worth...
The first one, and they're two different questions, really.
Yeah.
So the first one is, I tell you what to do. There's loads of people that if you think that there's someone that I should be debating, why don't you just tweet me at Simon Dixon Twit? Azad is actually going to be focusing on different types of partnerships and debates and different things that we should be doing. So why don't you tweet me at Simon Dixon Twit, and also include in the handle whoever you think I should be debating, whose show you think I should be on. There's so many amazing people out there that we'd really appreciate your help in identifying who that should be. And if you've got a relationship with them, why don't you message them, direct message them, let them know why you think that we should be debating. Let me know, and we'll try to make that happen. And if we can, the more people that tweet that, the more it's going to get their attention, and the more likely we are to make something happen. So why don't we do that initiative together? And Azad will make sure that he follows up on all those requests.
Okay, and the question that what regulation of stable coins are likely, if any? I guess you need to make a quick explanation of what stable coins is for those who don't know.
Yeah, so stable coins, for those of you that don't know the history, so I'll give you the history. So there was a concept called, so when Bitcoin came around, the technology had different use cases. And one of the really early things that we were exploring and got excited about is how it could be used to create different assets. And so people started looking at this concept called colored coins, where one of the early people that were looking at that was actually the founder of Ethereum, Vitalik Buterin. He was working as a journalist for a company called Bitcoin Magazine. And then he was trying to work on how we could use the Bitcoin protocol to actually build other assets. So you can digitize different assets, but on the Bitcoin blockchain. The technology was never really optimized for that use case. So someone launched a token on the Bitcoin blockchain, which is essentially another asset using the Bitcoin blockchain. And people started using it for fundraising. And this concept called building a token on another blockchain, like Bitcoin, and then selling it to people, created the birth of something called an initial coin offering, an ICO. And that was what went through a complete bubble in 2017, where there was a speculative frenzy of people investing in all these different things. And we ended up with thousands of different tokens and cryptocurrencies. But one of the very early one was something called the Omni protocol. And the Omni protocol is something that was later, it was originally launched as Mastercoin at the time. And this was used to create a concept by some of the early Bitcoin people, a gentleman called Brock Pierce. He funded an idea to actually take whereby you could use the Bitcoin blockchain and back it by dollars and have a stable value whereby you could send an asset just like Bitcoin, which is as easy as sending an email. But the value isn't necessarily going up and down like Bitcoin. It's actually backed by the dollar. And this was the invention of the stable coin. That was later sold to a company that I invested in called Bitfinex. And Bitfinex created something through a separate company called Tether. And Tether was the first one that really came along and got some kind of adoption. The idea was that you can have a token that can be sent just like Bitcoin, but for every one of the tokens, there was a dollar in a bank. And this went on for really didn't get any attention for years. The guy that actually really tried to popularize it was a guy called Phil Potter that was on the board of Bitfinex. And then at some stage, this whole concept of exchanges started to use these stable coins because many exchanges couldn't actually get bank accounts. So I started investing in lots of different exchanges that didn't actually have bank accounts, and they used these stable coins as alternative to bank accounts. And suddenly Bitfinex started having billions and billions and billions through, this stable coin Tether at a bank. And therefore it became like the bank to all of these crypto to crypto exchanges. And then eventually, as this concept was more popularized and Bitcoin had more volatility, people from different countries started to actually use this to get exposure to dollars in countries where their currencies were being devalued. So rather than so let's say you're in a country, you might not like the policy of what your government might be doing with something like the Indian rupee or the Vietnamese dong or something like that. And maybe there's some tight capital controls. So countries like India have always used gold as a hedge for that. But then people started to actually use stable coins in order to get dollar exposure. So they could convert some of their Bitcoin into stable coin and have dollar exposure and then use that as a medium of exchange. It became, when Bitcoin, which has traditionally went through, lots of different, in short term is highly manipulated. There's lots of pumps and lots of dumps. And therefore people started to use this stable coin to hedge their Bitcoin exposure, and particularly speculators in times when they wanted to not have exposure to Bitcoin price. And so this stable coin has now become a really interesting product because now financial institutions can use it because it can be lent and it can be used in order to receive yield. And so part of what I do and what we'll be going through is how you can actually supplement and get Bitcoins by using stable coins and utilizing some of this financial innovation in order to supplement income, in order to get some more compounding, to generate more Bitcoin and actually use that in a really easy fashion and more automated way. That's one of the things I've been doing for years. So I was always lending through Bitfinex in order to supplement my Bitcoin position. But again, I want to, as caution, that doesn't mean you should be taking all of your money and doing that, because it's all about risk management and understanding, different buckets with different approaches and understanding the risks around that. So anyway, stable coins are essentially a really useful thing now. So they're approximately, it's a smaller market than Bitcoin. There's about $7 billion of stable coins in existence, which is a digital token, can be sent just as easy as sending an email. So you don't have to send these international bank transfers that take 3 days. Some of them can actually be cleared in 15 seconds. But they're backed by dollars at a bank, or a new innovation is they were used with algorithms that essentially determined their stability. This is a bit more speculative, but the industry is really evolving. Now, all of that is a lot of geeky, a lot of history there, but it's really starting to reach a stage now where these different types of exposures and products can all happen outside of the traditional financial system, which is a really, really exciting point of innovation. and something that people that want to diversify into this industry should be exposed to. Obviously, I can't give financial advice, but as I said, when I'm what I'm working on at the moment is trying to just simplify this into something that anyone can take advantage of as they start to exit the traditional financial system into some of these new alternative products that also are a bridge between the traditional financial world and the cryptocurrency world. And they act as a bridge in the middle between this friction-rich fiat currency versus Bitcoin as our world's best shot at achieving sound money, and some financial innovation in between to bridge between the two.
Thank you for that, Simon.
Okay. The question was about regulations, right, of stablecoins. So I explained stablecoins.
Yeah, that was important to do because not everyone knows what stablecoin is. But yeah, if you could say, what's your prediction on regulations on stablecoin? If you could give a quick answer.
Yeah, so you got the intersection between the regulated world and the decentralized world, and those two will always have different areas of friction and regulation. Certainly, stable coins will be, they're already regulated. They are subject to the Financial Actions Task Force, which is a group that regulates those, and not all stable coins are equal, and they're subject to different jurisdictions depending on who creates that stable coin. I'm an investor in a company called Circle, which created the USDC stablecoin, and Bitfinex, which is that created the USDT, which is the largest stablecoin. And then there's others. Part of what I think we'll do is helping people understand the risks with these different stablecoins and understand which ones are the ones that what risks you should diversify away from if you start to play into that market. That's certainly something our research team has actually done, and I've been using those over the years, so can certainly help with that in future educational series.
Okay, I'm going to try and put two into one here, if that's all right, Simon. Basically, there's a lot of people who are hardcore with Bitcoins. They pick Bitcoin fans, Bitcoin evangelists, etc. I think you've coined the term, used the term Bitcoin maximalist, and some have asked if you are a Bitcoin maximalist, and has there been anything in the past 2 months that have changed your opinion or projection of where Bitcoin is going? And same question for the economy too, please.
Yeah, so Bitcoin for me is our world's best shot at achieving sound money and hard money. I believe that it's better than gold eventually for certain use cases. So Bitcoin for me stands on its own at being the only thing in the cryptocurrency industry because of its immaculate conception, where it was created at a time when nobody was speculating, where it was literally created by an anonymous group of people that never invented this thing to be traded against different asset classes and different currencies. And therefore it had time to become sufficiently decentralized whereby it wasn't dependent upon one entity or individual in order to come into existence. Initially it was, but then eventually those people left the project, and it was never brought to market as a way for a person making money. That makes it very different from other asset classes, which tend to rely, not other asset classes, other cryptocurrencies, which tend to rely upon an individual to promote it or an entity to promote it. And therefore you become dependent by that entity or individual for the growth of it. And therefore it's a different thing. Gold does not rely upon one entity or individual for its creation. It's a commodity. So Bitcoin has more commodity-like features than anything else in the cryptocurrency industry. And therefore it has a unique place as our world's best shot at achieving sound money. That doesn't mean that the innovation behind Bitcoin can't be used for different use cases and optimized for different use cases. An example is Ethereum. Ethereum has essentially become a protocol for the decentralized finance and some of those stable coins and things that I talked about earlier, which has created another wave of innovation that could actually move all over to Bitcoin, but Ethereum is optimizing for that. Now, Ethereum has no shot at achieving sound money. It hasn't even got a fixed supply. It's it's not some of the properties that make Bitcoin. And people get this very confused. And then there's all these thousands of other things which might be just for certain use cases, for certain different optimizations. Um, and so that confuses a lot of people, and creates a lot of noise. So when when I've been working with some high net worth investors getting into this industry, my goal is to take out all of that noise, understand what has what, and put that together into a really easy way to actually implement that, and take out the desire or the need for you to figure out where the bottom is, where the top is, take out all the speculation, and just really think about this in the long term, have investment principles, so that when you get distracted with, and there's lots of scams and all sorts of things in this industry, you can just cut out all that noise, take out all the emotion, and just follow sound principles. And that's what I've always done. That's what I've tried to do. I've made all the mistakes because, having been involved in this industry right from the beginning, I've seen all the different things that come along. I've lost money on certain things. I've made money on other things. And I've reached a place where I understand where Bitcoin fits in. So a Bitcoin maximalist believes that Bitcoin is probably our world's best shot at achieving sound money, and believe that everything else is a scam. I think that because of that mindset, you miss out on optimizing the reinvention of financial products through one step at a time using this technology. And I think there's a place for ultra high gamble like speculation, that many people take all of their Bitcoin and put it into ultra high gamble like speculation. And those people will always lose money long term. You might get lucky, but if you're trying to follow that type of mindset, eventually you'll lose it all. And that's what I've seen many times over the years. But there is a place for that. But just it's about really condensing down where Bitcoin fits in and where these different things fits in, and then really using sound investment principles to understand how much you're willing to speculate on something that is so unlikely to succeed in terms of other cryptocurrencies, and where that fits in with your overall strategy. So it's really about breaking down some of that confusion. And I think I've seen many Bitcoin maximalists lose out because sometimes ideology is very bad for your investment portfolio. And part of your putting together an investment portfolio is taking out some of that ideology. But that doesn't necessarily mean, well, I've seen a lot of people lose out on a lot of opportunities because they get stuck in one ideology. For me, it's kind of like Bitcoin can sometimes become like a religion. I certainly see many of those properties in myself, where I've got so much gratitude towards Bitcoin, it becomes sometimes cult-like. And I see that in myself. And so I've put together lots of principles to try and check myself, and also, use different learnings from different things to try and make sure that I'm not using those ideologies to rule out some of the great learnings from other religions. And so I believe that the most, the masters of the spirits, essentially, using this analogy, can pick and choose some of the great lessons and learnings from many of the religious cultures, and sometimes realize that many of our religions were adopted and we didn't consciously choose. And so questioning some of those to reinforce your beliefs. And so a lot of that really comes into the cult-like Bitcoin maximalism, and really questioning those assumptions. But actually, at the end of the day, that you could do a lot worse than just simply believing in Bitcoin, holding Bitcoin, and playing the wave, as long as you don't over speculate on that.
Thank you very much for that, Simon. Now, before we do get to our next question, we've got 10 minutes. Are you good for another 2 questions or one?
Yeah, let's do another 2 questions, as long as.
All right, so we've got 247 people watching this live streaming right now. And we once again want to say thank you to all of you guys joining us. And since we got 250, it's gone up. Oh, it's gone up to 254. We got 138 likes. Can we get a significant push in that? Simon, do you want to give the countdown?
Yeah, okay. So again, the YouTube algorithm means that we have to constantly remind you to press like so that we can get the following up. I believe we'd love to see this watched by thousands of people, and we're going to need your help to do that. So if you haven't hit the like button, a gentle, no, actually a really hard reminder to hit that like button. If you could do that right now. And once you've hit that like button, if you're not a subscriber already, please subscribe, hit the bell symbol, and we can get those notifications to you each and every time. And the more people that we have, I'm personally really energized by a larger audience. I think that this information should be out to more people. We need your help to achieve that. Things are getting better. I've only, as I said, for the last 10 years, been working with a small handful of very strong relationships. But now I really want to get this going so that we can have, it was really energizing being on the Tone Vase show where 14,500 people are watching live. And we'd really like to get there. So please help us get there so that I can give you better content, because I work much better when I know that a lot of people are listening, so that I can reach more people. Inspires me to give better content and do more.
And just a little caveat there, Simon's not a content creator. He's really out there trying to help as many people as possible. And I think one of the things that when I'm sifting through a lot of the comments and discovering that there's a lot of people out there who never came across Simon before, and really appreciating the work that he's putting out there, then give a thumbs up, guys. Thank you. We really appreciate that. Now, the last question, I guess this is going to be one big, massive question, and you might take a bit of time answering. If and when the global government adopts Bitcoin as a global settlement mechanism, i.e. the new gold standard, how exactly will the security be managed? Who will be controlling the password keys, the PM or the president? I guess that's a bit of a sarcastic question, but good one.
Okay, so firstly, lots of government officials own Bitcoin. That's already there. So what happened when I talked about the Silk Road example? One of the first things that happened when the FBI took down the Silk Road, a few FBI agents were actually arrested and went to prison because they were actually ransoming the founder of the Silk Road in this crony, corruption internal. Because a lot of government officials do own Bitcoin, and Bitcoin is designed to encourage self-ownership. It gives you three things. It gives you the ability to own your own money, it gives you the ability to spend your money, and it gives you the ability to piggyback off the fact that it's the hardest form of scarce digital money that the world has ever seen. So Bitcoin gives you those three properties. And individuals are the first people to actually adopt. The institutions are coming in. One of the announcements that came, which one of my, when I first left the investment bank, I went on a binge of, I think it was before or after, I can't remember, of reading every book I could on all the investment greats, books like Market Wizards, on every single investor out there that I could get my hands on to try and understand the mindset and the strategies of the best investors in the world. And one of those that I read was Paul Tudor Jones. And Paul Tudor Jones is a legend in the hedge fund industry, admired by many of the greatest fund managers and investors in the world. And he came out this week just before Bitcoin halving saying that he's put 1 to 2% of his portfolio into Bitcoin. And that is a legendary hedge fund manager that all of the other hedge funds follow. Now, if that turns out that their performance starts, Paul Tudor Jones' performance starts to outperform other hedge funds, then people defensively need to add Bitcoin to their portfolio. The issue is that there's not an easy way of securing Bitcoin for an organization because it encourages self-ownership. And so many solutions have been built, and I've invested in many companies that are building regulated custodial structures, exchange traded fund products, applications. All of these products are now being built. But I encourage people to explore the true benefits of Bitcoin, which is self-ownership. Now, how does that relate at the government level? Well, the skill of the future, and one of the things that I do at Bank to the Future is all the companies that we invest in, we had a really big debate about the skill of the future is going to be, being able to store and own private keys in a secure way. It's a very hard problem to solve. Entrepreneurs are solving that so that it makes these things easier. There are many companies out there that that can help people in an organizational structure own those, and that's no different for the government. I don't think a government's necessarily going to adopt Bitcoin. I think a central bank will hold it as a reserve currency. I think individual politicians will certainly own Bitcoin. And I think governments will try to confiscate Bitcoin, as they have in the past, from criminals using it for criminal activity. And we saw that in Bulgaria, where the Bulgarian government allegedly confiscated some Bitcoin, and the value of those Bitcoin that they confiscated became worth more than the national debt of Bulgaria. And it became an actual way and a mechanism that they used in order to control their national debt with those assets. So there's very, very interesting scenarios that countries can adopt in order to, take advantage of the fact that we've got this new form of a speculative store of value, that the world is gradually, one step at a time, understanding its true properties and how it can benefit. It's a big question, private key management, and maybe the solutions out there can be used just by governments as well. But governments use it already anyway. So if you look at organizations like the CIA, Edward Snowden essentially leaked the private key, as it were, on the government's strategies and data. And so organizations like the CIA rely upon the same encryption that's used in Bitcoin and the same mechanisms for storing private keys to prevent them getting hacked of confidential data. So this process is well known already for storing and protecting confidential data within governments.
Okay, I'm gonna throw in a sneaky one here. It's if that's all right.
Yeah, let's do the final one and then we'll wrap it up.
Okay.
If everyone could put in the comment section what they'd like for me to cover as the main topic next week. If you didn't get your question answered right now, then stick it in the comment section, put it in the live chat, and Azad will try and pick out what we should cover as the main topic next week.
Yep, definitely would do that. We've had some really good questions. And once again, thank you guys. Smash that like button. Really appreciate that. Now, Simon, I'm going to put in a cheeky one here, but I think it's highly, highly relevant given the situation that we're all in. There's huge interest in the course that you're working on to put out there. But in terms of this whole pension thing, can you give us your sort of forecast as to what's going to happen with the whole pension fund globally or in the UK? I mean, whichever you think is right, and how cryptocurrency and things like Bitcoin is going to start paving the way of how people can start really building on their retirement.
Okay, so this is an interesting question to end on. There's a lot to that question because there's different types of pensions. So there's government and state pensions, which means that you haven't put together a protective measure for your future, and therefore you rely upon the government to look after you in the future. And that is a bankrupt system. It wasn't built to support all of the baby boomers retiring and the level of volume that pensioners have right now. And so therefore those systems need restructuring in order to ensure that those that are 100% rely upon those systems, they're going to need some major restructuring, because essentially they were never designed to support the number of people that they have to support right now. It was always designed as supplementary, but as the fiat Ponzi scheme got worse and worse and worse, it led to the government encouraging people to go into over-indebtedness. So individuals, in order to stimulate the economy, started expending on credit cards. Businesses started using the debt capital markets in order to borrow and buy back stocks to stimulate the stock market. And banks started encouraging home ownership which led to people taking on mortgages, which is 40% of the money supply in countries like the UK, and the main tool for money creation. And then government started to come along and say, we'll guarantee your deposit. And therefore, people that started to get bigger and bigger and bigger into debt and debt and debt. And then more and more people started to go to university, take on student debt, never get out of the debt cycle. And as eventually we ended up in the situation where we are today, where the economy is 1000% addicted to drugs called debt. And we have to have more debt in order to have more money. And every time debt levels go down, we have a depression, recession, or an environment like we seem to be going to. So that's the debt trap. Now, what do your private pensions do? Well, your private pensions invest and try and beat the markets. And they do that in a couple of ways. So firstly, you have the most expensive hedge fund managers in the world that have yachts and private jets and expensive houses, all paid for from the fees that they skim out of your pension. And they try to beat the market, and 83% of them don't beat the market. So you're paying for underperformance. So it's a really expensive way of trying to actually get exposure. And what they do is they purchase two main products and some other products. One of those is stocks and the others is bonds. Bonds are loaned to the government and loans to corporations. And the other is stocks, which is investing in industry and you becoming a business owner in the most successful, highest cap companies in the world. So it's tied to the performance of the stock markets and the bond markets. And then they might implement additional strategies like investing in real estate investment trusts and various other products. So it depends when you retire the level of exposure. Now, most of those, the issue is that there's actually really easy ways of doing these things yourself, using index funds and low-cost index funds and supplementing it with the cryptocurrency industry and Bitcoin in order to put together an approach that works in any inflationary environment, any deflationary environment, and any time of economic growth and any time of economic ungrowth. What do you call economic? What's the word I'm looking for? Bad economic times. I lost the word. And so what you tend to do with your pension is you're paying horrific fees for underperformance, and very few people know that that's even happening with their money. And so those schemes, are exposed to the markets and so many different products. And you would hope that they have an approach that works in inflation, deflation, good market, bad market. But the problem is when you retire, if you happen to retire at the wrong time, then your pension is worth significantly less or more based upon their approach and their strategy of what is happening in the market. So trillions and trillions has been obliterated from people's pension in the current environment. And that may or may not pay for your retirement, which is petrifying things for so many people. So if you're not in that position, people are encouraged, and especially in the generation of people that don't really consider investing, that consider debt and as a primary tool, it's about looking after yourself, planning for your own thing. If the way that I see it, if the government gives me, some kind of pension in the future, if my traditional market pension that I had when I worked in investment banking pays out in the future, it's a bonus. But I am not betting on that, and I'm not relying on that. And so people need to put their own strategies together. And it also needs to do what the traditional financial products don't do, is exposed to the tradition. You need to hedge your exposure to the traditional financial system, which is where asset classes like gold and Bitcoin become really, really important. Even if you don't believe in Bitcoin at all, it should be part of your hedging strategy just in case as well. And these are the types of ways I'd encourage people to think about these. That's the type of thing I'd like to cover in simpler ways, because there's so much complication there. There's 20 years of different experiences in there, but I think I can unpack that in a way that my mission is to make it possible for people that really want to do this in a simple way. And that's really my goal in how I'm thinking about this. And those that actually want to go through the complications of different understanding different financial markets, I'll keep releasing the content on YouTube as well. So subscribe if you like it, share if you like it, tweet me exactly anyone you'd like me to debate, who I should be interviewed by or interviewing in. Let us know, and Azad will pick those up.
So, Simon, just one final question, please, and then I promise you
Be short then.
it will be very short. How was your experience on the 12-hour marathon that you did on Monday?
It's a lot of fun. They had some really great guests, some really interesting guests that should be there or shouldn't be there. And there's a bit of a nostalgia with some of the earlier people there. But it's great. I really appreciate that, Tone Vase managed to get so many people in one show. It was a little bit difficult to get a word in edgeways because there were so many great people on that show. It's if anything, Bitcoin Halving is a great event for getting people together and discussing really interesting topics. So I'd love to see if we can get that level of interest on our channel, so that we can have the same type of environment as that. Yeah, really great.
Oh, we already had one person who's friends with Joe Rogan, I believe. They want to be hooking you up. Let's see and watch that space.
That would be awesome. Yeah,
yeah. Thanks, everyone. Thank you, Simon.
All right. Okay. Yeah. Thank you, everybody. And I'll be live next week at a similar time, same time, to do your AMA. And we'll see if we can release, if Azad can pick out some of those videos. And he's making sure I can, in a time efficient way. As he said, I do have a company to run, and I do have a lot of commitments. So I'm not a full-time content creator. But I just think this is really important. So I'd like to do this for everybody. And the more energy we get, the more people, the more I'll try and do this. And Azad is really helping me to do this in a time efficient way. So reach out to him as well. And he'll try and make that happen. Thank you. Bye-bye.